Good morning, 10:35 a.m. Pacific Standard Time, 10/27/2012. Happy Halloween to everyone. Happy Halloween to everyone. But more importantly, let's talk about Mr. Obama and Mr. Romney. Now, in our S&P 500 video, which is the more lengthy one, it will have a lot more of your economic commentary that you need to know. It will be applied to here as well on the Dow. Right now, since we've had this wonderful bull rally, I will go over here and just give some of the history that we have done. When we had to short the Dow, this is where the austerity, that's the summer rally. Then we had this pullback here. So you had pullback 1 and pullback number 2. You're below the 10-week simple moving average. When you close 1, 2, 3, 4 weeks and the 10-week is declining, that's called a bear reversal. It does not return to a bull until you get 4 weeks back above it, and the 10-week has to flatten out. This is what the bull does when it comes back to life, and this is what the criteria will be. It's a very mathematical defined criteria that we use here at stockmarketfunding.com, and it is very accurate because math doesn't lie. Everything else does. Now, having said that, we have the first weekly close below the 10-week moving average on the Dow 30, right here. Closes at 13,107. When I take a look at the all-time weekly low of 13,039, that hit our number and bounced on the red line called the 20-week moving average with this diagonal trend line as the major reversal downtrend here. Started right here. It also, on the flip side, the major resistance levels that we had over here, we broke up above there, and that's that very same trend line. They serve the same purpose mathematically, straight down to the summer rally, mathematically back up to the resistance levels that were the major support levels before they broke down. Nonetheless, it is going to be the major support level here on the Dow as we move forward. There are various different trading instruments that will be implemented, both for the bear case of Obama and the bull case of Romney. Now, our position is that we've had 4 years of things that haven't worked, and at this point in time, we don't have a whole lot to choose from. Either we can choose what has taken us down the roads of high unemployment. Corporate of America is laying off more people right now in the fall than we've ever seen. You've got the Obama health care thing. You've got small businesses suffering. You don't have the right tax rate, meaning it's got to pull the base down. There are so many things that have to be done. We don't have a lot to choose from. We don't know exactly that the other guy, he means well. He talks well. He's willing to do the things that the current president for the last 4 years is not willing to do. And once again, America was built on prosperity of entrepreneurship, free capitalism, and free markets. And markets should be the dictator in the private sector, not the government. Government should stay out of the private sector and quit regulating. We have got more small businesses that, yes, a big corporation, well, they got tens of thousands of lawyers and they got lots of money and they can do lots of things to get to regulatory compliances that even hurts them. So we know over the last 4 years that the small business people cannot have the luxury of doing what big corporate can do with all of these regulations. And regulations are good to have, but we have got regulations that choke off prosperity. And a lot of these regulations need to go away. And the only way they're going to go away is if we get a new president. If we get a new president who says he's going to do that, has to be held accountable, who is willing to do that, well, then that's a better choice than what we have right now. And as far as I'm concerned, you never have any great choices with these people, but we're at the point now that January of 2013, for about the first 6 months of 2013, can be very ugly for the bull and America in general. If we break this support line, he comes into opposite. The 50-week moving averages is at 12.8. The 100-week moving average is clear down here at 12.373. That's where you go. This MACD would go into a weekly sell signal. It gets real ugly when that happens for the bull. The bull trend, the calendar 2012, has been quite different than any other time in U.S. market histories, only because everyone sat out the whole rally here that we called when we called the bottom. Why? They had every reason to. All the uncertainty. You don't have pro-growth president. There's a lot of things that you don't have working. The election is probably one of the most important ones you'll ever have. It's right now is where that turning point. I can tell you right now, we go down another 4 years, and you are going to go, and just let me show everyone what's below the marketplace. I'll just be very kind about it. I'll be very real and kind, both. You see this 2009 low over here? That's what's below this market, all this down here. Now, can the Dow go to all-time highs as it was back over here, which was 14,000 and some change up there? How could the Dow get to 14,500 or 14,700 or even higher than what we have seen all the time? Is as if we can turn the situation around. This Dow could break these highs over here with the right kind of pro-growth and what America needs. And we always give our voice out because we know what America needs. We know what the citizens need. We know what the workforce needs. We know what the Federal Reserve should be doing and not be doing. We know what lots of things should be happening in the military. There are lots of things that we are more vulnerable at risk than any other time in our history. Because I can tell you one thing, it can get very, very, very ugly. What drove it up in anticipation, if there is failure and disappointment, it will drive it down fast and hard, just as it did off of the calendar 2009 stimuluses to all-time highs back up to where the original financial crisis. We can all remember what happened in the financial crisis when Lehman Brothers went down. It was going to be that major catalyst way down here at 10,500 of the 2011 lows. And we came ripping and roaring back. But let me tell you something. We don't turn this fiscal cliff around. Higher taxes, higher uncertainty doesn't bode well. Corporate earnings are at all-time lows. 4-to-1 negative ratio in the earnings cycle in this quarter. You haven't seen that for 10 years. That means that if we keep going down the wrong road with the wrong people, another 4 years of what we have just experienced, you will experience a much lower Dow. And we've got key areas down here at 11,500. You've got different areas of support all the way down. The bull took it up. The bear can take it away. And I can guarantee you right now, in order to trade this and invest properly and trade, we're market makers, so it doesn't matter which way it goes. We just take whatever it's willing to give. Up, we go up. Down, we go down. So the 20-week moving average is at support level. Take a look at the S&P 500 video to get more of your economic analysis. I put quite a bit of it in there. It's a much longer video, but if you're going to be involved in the market MMTs, you're going to go back and study and listen and look. First weekly close below the 10-week. When you are in a bear, you go down 4 weeks below the 10-week. That is a bear trend. Bull trend comes back when you're above the 10-week and it's rising, and that is your bull cycle. We master bear and bull cycles on an intraday level, long-term, short-term, medium-term, doesn't matter, yearly term, doesn't matter. What does matter is that we're at the brink of the major support level, like I said. If we break it, yes, you will come down gradually to other levels. But once we start hitting this support level of 12,888, right above this 50-week moving average, this pink line, this is where that major wall of resistance is. This is where, once you broke that, this is going to be the lower support level. If we break it, it's going to be right here. Because this is where that weekly bar got back up above here, and that 10-week was acting right, and that's where your bull went to the top of this reversal. We had reversal 1, then the long rally again. So we've had 2 big rallies in calendar 2012, a short bear reversal here and a bear reversal in play here. It's going to be very interesting because we will keep everyone updated as we go into November 6th, and happy Halloween at the end of the month. Starting Monday, which will be the last calendar week of October, and October can be pretty bad, and the earnings haven't been great. So, once again, the Dow Jones is at a massive critical support level. It's one of the most important times of support level because of the election and what the United States must get going. We have elevated terrorist alerts around the world. We've got Iran, we've got Israel in there. We've got major other things happening around the world. The threat level has increased in my view. We are more vulnerable in the U.S. than any other time in history. They have, Al Qaeda has made it very clear that they will go to any length. And whenever we're having a major election, that is a perfect time for these problems to happen. We are under serious cyber attack alerts around the United States. Our financial banking system is at jeopardy. It's being compromised. Our power grids through the electronic computer system could be shut down, and a blackout could happen very easily. We are very vulnerable in the United States as far as security goes with a major election right now. The markets have a lot to chew on right now. And I can tell you something now. Normally, October is to make a bottom and then rally up in November and December, called Thanksgiving Christmas rally. Well, I'll tell you what, if there isn't going to be any change for the forward-looking next 4 years, you're not going to have a summer rally. It's going to be met with selling because people are going to want to sell at a lower tax rate and take profits, because if they wait, they're going to pay higher capital gains tax than they are now, dividend yield to go get tax higher. And you know what? You'll get tax at a higher rate. So you could see a lot of tax selling at year end based on this election. And I tell you this from the bottom of my heart, because for the people that are out here trying to make heads and tails out of it, we really do care about who you are and how you'll be affected. Someone has to care about you, so we will. And we do. And it's important that you understand what could happen. So I'm going to conclude the Dow video with watching the S&P 500 analysis and the NASDAQ 100, which we did. And we are in a major support level. And if we don't get some kind of resolution where uncertainty could leave and people's enthusiasm in the small business arena would re-engage, rehire, and listen, take-home pay has gone down and the cost of living has gone up. What does that mean? It means that the cost of when you get your paycheck has got to go higher, not lower. Since we've been under Obama, the paychecks have gone lower and lower. Take-home pay is not at the highs. No, it's not. The cost of living is, but the take-home pay is lower. There's something wrong with that. So, what we would tell you to do, whether you invest in the market or not, is that you would tell your friends, it is time to stop this misery. There isn't a lot to choose from in the election, but one side is what we don't want, and the other side says that they'll do what needs to be done. That is our choices at this moment in life. And the thing about it is that we don't need to go in the European model where Obama's taken us. He's taken us in that European model, that France model, that socialism, that welfareism. Look, there's nothing wrong. We had welfare in this country to help the needy so that they could get back on their feet. But all we have is people taking and abusing our system every which way, whether it's from the consumer base or the politician base. But it's take away from the system. The regulation to our system is not being regulated, nor are we having the right governance. And we need the right governance. We need people to run this country in the right way. We do not need to demote the military, because there are other militaries around the world, big militaries around the world that are catching up to the United States. So we can't afford to abandon our protection in the United States, but rather enhance it. And if we get the right president that gets the infrastructure built, look it, we're vulnerable more than any other time in America. Just be aware. This is a conclusion on the Dow. It's at a major support level. It's got to stay above the 20-week and consolidate here. It's got to close back above the 10-week. The 10-week starts to roll over. You get 4 weeks below the blue line like you did over here. That constitutes a bear side of the market. The bull side is when it gets back up above and rising and breaking out. We're at major critical levels in the United States. So we're not telling you who to vote for, but what we are telling you is to take a great look at what your life has been the last 4 years and what it would look like by having a much higher tax rate. I mean, take a look over there in the European model or France, 70% taxes. They're talking about getting that up there. Look at, you got to have more take-home pay. And government can't run businesses. They're not qualified. People that are qualified to run businesses are the small entrepreneurs of the world who develop the businesses, who hire the people and put people back to work. I've got people that are making money on a job that was $25 an hour, they said. But you know what? The same guy lost that job and benefits. So he lost a $25 hour job and he lost the benefits too. Now he's got an $8 an hour job and no benefits. That is not what you deserve. You deserve benefits and a higher paying job and a good paying job and to go back to work. That means that the families in America, all the mothers that sit down at the table, they're trying to put food on there at night. They're having to scrimp, get by, cut costs. Even the kids' nutritional values are at stake because of the money situation that families have. And the thing about it is, if it doesn't change, there'll be lots of problems in calendar 2013. That means that this Dow has got a long ways to go down. That means that the first half of 2013 would be very vulnerable, very weak. The Bush tax cuts go away. Higher taxes come in. That is a tax on the consumer. That means that consumers like me and you, we won't go out and spend money. Why would we? We would have to scrimp and save just to make our ends meet. So we're not going to run down to the higher retail outlets and buy some gifts and things like that. We won't have the money to. But we will tell you one thing. We will make money in these markets no matter what this outcome is. If it's a good outcome, we go much higher on the Dow. If it's a bad outcome, it goes a lot lower on the Dow, and it will in calendar 2013. And we'll make money all the way down just like we always have in the last 30 years of being in this business. Happy Halloween. Good luck with the election. No matter what, we're going to make money, whether it's to the upside or to the downside. And I will tell you that if we go into a weekly sell signal and we start breaking these major bull support levels, then we start going down lower and lower, then the bear starts to get more into the tape, and before you know it, the bear and bull will be even, and then the bear could take over very easily again. And it's very possible. People that have underperformed the market are waiting on the sideline to get in the market. FOMC meeting has done what they've done. QE3, I'm not going to go into that. Go watch the S&P video. It'll tell you all about it. Now, the thing about it is we are at that critical area. Have a good weekend. Have a good election period. And for the people, hedge fund managers, mutual fund managers, people in the upper part of the Wall Street, when you are watching our video, just let you know one thing. Be careful when you're buying the dip, because you can buy the dip when you weren't in it, and it can still go lower on you. And I know that most fund managers have underperformed all year. It's been one of the most hated rallies in Wall Street history or U.S. history in financial markets. Public doesn't like it. No one likes it. When you get rallies, you're supposed to love it, not hate it.